I'm Greg Hunter. Welcome to USAWatchdog.com. With us, we have once again our best-selling author. He wrote this book, which is a bestseller, Great Deformation. It's a huge book. It's the corruption of capitalism in America. There's no way you can ever say that this author takes a shortcut. Look at the size of this thing. You do get your money's worth. Well, this author has a new book out called Trumped. It's by, of course, there it is, David Stockman. It is a nation on the brink of ruin and how to bring it back. The reason why it looks this way in this binder is that they were kind enough to send me a draft copy of this book. I went through it. I love this book. It's fantastic. Let's bring on our author, David Stockman. Thank you for joining us today on USAWatchdog.com.
Very happy to join you, Greg.
Well, listen, I know the book is out, and you can pre-order the actual real book that will come in an actual binded form, like your Great Deformation. You can also pre-order the book and also get it online. Is that correct?
Yes, the ebook is available now. The printed book will be shipping in a week or two, but you can order it at this moment on Amazon. So this is obviously a time-sensitive book and a set of arguments and perspectives. So we had to get it to print as quickly as we could. I think the election now is heating up. This is going to be some kind of spectacular run to the finish line. And it couldn't be more timely, I think, to have this discussion with you about what it's all about, what's between the covers, and how it relates to the campaign underway.
Just so people know that you were former White House budget director in the Reagan administration, you are a uber financial expert, best-selling author. I just want to get that in. I want to start with with your book. And, this is just something right out of the beginning of it. And it says that Trump's rise to the GOP as the nominee is the, quote, most significant upheaval in politics since Ronald Reagan. You worked for Ronald Reagan. Explain that. Why in the heck why did Trump make it when all the pundits said, oh, no, he's an idiot. He'll never make it. Well, he's not such an idiot, and he made it.
Well, I think in some ways this is even more of an upheaval than in 1980. In 1980, the argument was mainly the failed policies of Jimmy Carter and the Democratic Congress. There was a groundswell of throw out the rascals, and despite all of the tremendous effort by the mainstream press to discredit Reagan, he won pretty handily, especially after his second debate with Jimmy Carter in Cleveland. If we get a chance to get to that, Greg, later, I do want to mention the fact that I was his sparring partner in that debate rehearsal. I was Jimmy Carter, spent a week preparing him for that debate. And in that preparation, he practiced over and over many of the lines that I think were decisive, crucial in winning that debate, and then really gaining some momentum in the polls for the last couple of weeks in winning the election. I think we're going to have some of that in these debates coming up between Hillary Clinton and Donald Trump, and I just want to mention that at the outset. Now, the reason I think the upheaval is even greater is that despite the efforts of the Reagan Revolution, so-called, to change the direction of the country, it really didn't succeed. We slowed down the growth of, big government, the welfare state, if you want to call it that. But it lost momentum, and then we unfortunately got Greenspan in at the Fed, who promptly forgot all of his hard money and even gold standard principles, and became, the maestro and pushed the Fed in the direction of what is simply Keynesian central planning through the crude instruments of interest rate controls, and then, as we've had in the last few years, massive monetization of the public debt. My point in the book is that this has created a false economy, and Donald Trump actually said that a couple days ago in commenting on the Fed, and also suggesting that Janet Yellen should be ashamed of herself, and I agree with him as well, and we'll get into that. But the point is this shift in monetary policy towards what I call bubble finance, towards inducement of massive expansion of debt, in the U.S. economy in every sector, household, business, government, obviously, and in turning the financial markets into casinos, gambling casinos, essentially, we have basically transformed the kind of capitalist economy that Reagan inherited in 1980 into a kind of mutant variation of casino capitalism or crony capitalism that isn't working and that has basically benefited a narrow slice of the population. I call it the bicoastal elites. And if you recall from the cover of the book, which I think you held up there, all that white space in between on the map of the United States, for want of a better term, I've called flyover America.
I'm holding it up right now. You can see Trump's in the middle. It's a very it's very telling. You also brought up the fact that that the Forbes 400 richest people, their wealth grew by 1,000%. I thought that was stunning. And meanwhile, flyover America got creamed.
Yes. Part of the point is that bubble finance I was getting to essentially has benefited a very narrow slice of the population. You'd call it the 1% or the bicoastal elites, but who own most of the financial assets that have been dramatically inflated beyond reason by all of this money printing or money pumping, whatever term we want to use. But it's resulted in a dramatic shift in the wealth growth process in the United States. And I'm not, agreed at all with leftist critics like Piketty, as you remember, a book from a while back, or certainly not Paul Krugman. They're always whining and beating the pans about income maldistribution. My point is different. And that is that this kind of bubble finance doesn't really create sustainable wealth for the long haul, but in the short run, it does cause financial asset values to soar and therefore to create the temporary reality that those on top are, gaining enormously while the rest of the population stagnates. And that's the point that I think you're suggesting that's front and center. It's on the second page of my book. And that is if you look at the net worth of the 90%, the lowest 90% of households, which is most of America, it's about 105 million households, their average net worth since 1987, and I use that year not just to arbitrarily pick a starting point, but that's obviously when Alan Greenspan took over the Fed and had the crisis in October and then launched down this path of bubble finance. But in any event, over that entire 3-decade period, the real net worth adjusted for inflation of the bottom 90% has stagnated. It's flat. It's no higher today than it was in 1987. By contrast, the net worth of the top 1% of households in the U.S., which would be about 12 million households, is up by 300%. And then to take the last leg of this, the Forbes 400, which is a tiny, tiny slice, obviously, of America, is up by 1,000%. Now, my argument is that this isn't real free market productive capitalism at work. You don't get those kind of outcomes over 30 years. Sure, there is a lot of puts and takes and volatility in the short run as to who's getting ahead and who isn't. But on a 30-year basis, you would never expect to see 1,000% at the top, 300% for the 1%, and no progress at all for the overwhelming share of the population, which I shorthand as the inhabitants of flyover America. So that tells us that something is fundamentally wrong, and the heart of it, which I think we can go into next, is obviously the elephant in the room that no one wants to mention, and that is a rogue central bank.
But
I
before we get there, this is why the numbers Main Street gets nothing. The top 1% gets 300%. The top 400 and the 400 get 1,000%. This explains why Trump is rising and has risen as fast and as hard as he has. Isn't that also the point in your book?
Yeah, that's exactly the point. The book did not start as a advocacy piece in any way for Trump, because there's half of what he's advocated or ad-libbed I wouldn't agree with, and probably find some of it very reprehensible, actually. But I wanted to address why this phenomenon is happening. I mean, he wasn't given a snowball's chance of even making it through the first Republican debate, let alone the Iowa primary, let alone the nomination convention, let alone being ahead in the polls this week as we speak in the crucial swing states of Florida and Ohio and so forth. So none of this was remotely expected by the mainstream media, who obviously drink the Kool-Aid and believe that everything's all fixed, and the Fed is, composed of great heroes, and Obama has saved the economy and all that. We don't believe that at all. So I started this book trying to explain why there is so much economic pain in flyover America, link that to the wrong-headed policies of the Fed, which we can get into now, and explain, therefore, what I call the revolt of the rubes. And I don't use that in a condescending way. I use it in a way that, the so-called sophisticated press thinks that they're the enlightened ones, and the rest of the country is kind of dim-witted and doesn't get it. So they call them rubes. But the rubes are revolting, and they're revolting because they can see the system is rigged. And that, again, on the cover of my book, you can see that the benefit is going to the orange areas along the coast, and it's leaving flyover America behind. They know this is wrong. They are fed up. They've had enough. And I think that's where Trump is coming from. So what I've done in the book is then try to systematically go through why all of this is unfolded, and some of the metrics that can help us understand it that have occurred during the last 3 decades. But I do think that maybe we're at an inflection point finally where someone is fundamentally challenging the rule, as I call, of the Wall Street Washington elites. Trump is kind of a wild man in some ways, but he hasn't spent 30 years in Washington drinking the Kool-Aid and believing that he has the right to run the world from the White House or Capitol Hill. So I think he is a fundamental threat to the status quo. He is a disruptor that maybe finally will wake up the country and reopen a debate in Washington about which direction the country's going in and what policies ought to be, that essentially has been dormant for the last 2 or 3 decades. Frankly, I think the Bushes and the Clintons are just peas in a pod. There are 2 dynasties that like to have war abroad, as much debt as possible in the domestic economy, a capitalism that is run by cronies and insiders in Washington, and really a totally different vision for America than what we've traditionally had.
Oh, let's get to the bubble. I want to talk to you. The bubbles, China, in your book, and we can't go through the whole. It's a huge. I mean, you're all going to have to buy this book to go through. That's all, and I'm not saying that because I just cannot get through something. This is the, again, draft copy. I'm holding up the draft. There's charts. there's all kinds. There's no way that Mr. Stockman took a shortcut here. I mean, he put a lot of work into this thing in a short amount of time. But the bubble finance, the China bubble, the global bubble. How close are we for this bubble popping? You've been warning about this, and every time I see you on the mainstream press, they look like you're absolutely lying to them about this bubble. But we are close, are we not, to this bubble popping?
Yeah, we are, because the central banks can inflate bubbles seemingly indefinitely, but at some point, valuations become so extreme that any kind of unexpected event, or black swan they call it, or catalyst that wasn't expected, can finally cause the system to go tilt. Selling pressure to start, and then once it gets catalyzed, really gather very rapid momentum. Now we see, now they always tell me, oh, you've been saying this for several years now, so where's the Armageddon? Well, they said that in February 2000. This time is different. Remember, the dot-com, the NASDAQ had gone from 1,000 to 5,000 in 2.5 years, and this was all allegedly sustainable and normal. And then, beginning in late March and April, the whole house of cards came down. And so everybody who said, what are you warning about, was proved to be wrong. Then they got going again with the Greenspan housing bubble. He dropped the interest rate, as you know, over a 30-month period from 6.5% to 1%. We'd never seen interest rates like this before. There was the mortgage boom. Housing prices doubled, in some cities tripled. And we got to October 2007, and you could go on to, these TV shows, and they would say, we're in the Goldilocks economy. What are you talking about? You've been warning about this for a while. And then the next thing we knew, we were in September 2008. We had the Lehman collapse, the meltdown. The stock market dropped by 55%, and the broad average 70 or 75% among the high flyers. And we were in the crisis, the biggest crisis since World War II. So here we are 7 or 8 years later. I think we're on the very edge. But what's different this time, and makes it more scary, which I've tried to lay out in the books, is that I believe the central banks who've ruled the roost and just gone from one extreme to the next, unfathomable things like negative interest rates on 13 trillion worth of government bonds around the world, European, Japanese, elsewhere. Money, monetization of the debt, bond purchases at rates that are staggering, 90 billion a month in Europe. Japan owns the Bank of Japan owns almost half of the government debt, which in Japan is staggering. Here, over nearly half of the 13 trillion of federal debt outstanding held by the public is actually in the vaults of central banks, the Fed, the rest of the central banks, and sovereign wealth funds around the world. So this time they went all in, as the phrase goes, violated every principle of sound money and sustainable finance that mankind ever learned about over many centuries. And they've taken us to the edge, but they're out of dry powder. I think it's pretty obvious now they can't go any deeper with so-called sub-zero interest rates or negative interest rates, because in Japan it's already punishing badly the banking system. In the United States, if they tried it, I think there would be a huge political uprising, because the savers have been savaged with practically no return for 7 or 8 years, and if they actually tried to push it into negative rates here, people would finally say, enough is enough. You are essentially proposing to confiscate our wealth because we've prudently tried to set something aside and keep it liquid, put it in a bank account with a FDIC guarantee, and now you're going to be charging us for the privilege. I think what I'm saying is they are out of dry powder. They're out of tools, and therefore the financial markets of the world are more vulnerable than at any time, maybe even more so than 1929, if you want to put a metaphor on it. Because the extreme valuations in the bond market, it's crazy. In the world bond market's $100 billion, and all bonds are tremendously overvalued because remember, the price of a bond is the inverse of the yield, and when the yield is like it was a few weeks ago, 1.3% on the 10-year in the United States, or below zero on most of the government bonds in Europe, or German bonds anyway, in Japan. You're talking about a bond bubble like never before imagined or conceived, and the stock market's the same way, as well as derivatives and much else. The stock market today is trading at 25 times trailing gap income, even though for the last quarter, June, the 12 months ending in June, the last reported period, profits on the S&P 500 were down 19% from where they were a year and a half ago. So you have to think about that. Profits are down 19.5%. The world economy is visibly slowing everywhere. The U.S. is near the end of this business expansion, and I think drifting very soon towards recession. And yet you have a stock market trading at 25 times earnings that are falling. So these are all signs of how extreme the valuation is. But my point, I think, that just needs to be repeated over and over, is that once the selling really starts, for reasons that we can't predict right now, maybe it's because a poll comes out on October 20th that has Trump way ahead, and it scares the hell out of Wall Street and the mainstream press. Whatever the black swan turns out to be, if the selling starts, there will be no bid, so to speak, down below. The central banks will be paralyzed, they'll be confused, they'll be arguing with each other. It's already happening on the Fed, and that's why it's going to be very interesting to see how they explain what they do next week, which I think will be nothing again. But it creates a situation where the safety net, the so-called put of the central banks, has disappeared, and the gamblers in the casino don't seem to recognize that yet. And so therefore, they're like the daredevil kids that you can all remember, who get on their bike and yell, "Look, Mom, no hands," and that works until gravity takes over. I think that's where the stock market and other financial markets are today.
How bad is this going to be? I mean, what is this going to look like to the man on the street? How bad is this going to be? Are people's 401ks going to be wiped out? Are pensions going to be gone? Are they not going to be able to pay Social Security and even military pensions? Is everything going to just get wiped out?
Well, I don't know that it's going to get wiped out, but it's going to be one blow after another of bad news. I think the stock market is probably 40% overvalued. In other words, if you look at the earnings for the most recent period, it was $87 a share on the S&P 500. You do a little math, and the market really shouldn't trade at more than 15 times earnings, especially going into a world where we've got deflation, debt like we've never had before, the red Ponzi in China, which I hope we can get to, which I think when it goes down, and it's going to go down soon, will take the whole world economy with it. But my point is that in that kind of world, 15 times earnings at best is a reasonable valuation, which means the stock market, and I'm talking about the S&P 500 here, should be maybe 1,300, not nearly 2,200. So,
boy.
Okay, so that's a 40% or greater decline, and I think that is clearly in store. There's a lot of people who say, "Yeah, I've been skeptical of the stock market. I've been burned twice with the dot-com bust in the spring of 2000, and then the Lehman meltdown in the fall of 2008. So I've stayed in bonds and fixed income. And the bad news I have on that is that fixed income and bonds are as overvalued today as stocks are. Especially if you go into the junk bonds, they're so-called non-investment grade. The yields on that, even today at 5 or 6%, are really crazy, given the prospects for default that lie ahead. The government bond markets of the world are tremendously overvalued, and so it's all a confidence game. And if you reach the point where the central banks run out of dry powder and have to stop printing money, that is buying bonds, there's going to be no bid, and there could be a real panic. We've seen that, by the way, in the last 4 weeks. The long end of the bond markets around the world has backed up quite dramatically in a short period of time. In Japan, they're very worried about it right now. The 30-year bond was trading at 6 basis points, if you can imagine that. In early July, it was up to 75 basis points a day or two ago. Now, that may sound like not a big difference on yield, but in terms of the price of the bond, anybody owning that bond lost 20% while he was, sleeping overnight. That's how dramatic the beginning of this sell-off has already been.
And do you think that the red Ponzi, let's get to that real quick.
Yeah, sure.
That could take down the whole world. Explain. You think that could take down the whole world? What's going on in China? The leverage, the debt, the Ponzi scheme, the real estate market. You think China could be the catalyst that could take down the whole world? Briefly, why?
Well, because China has really been the lead engine of expansion for the last, 20 years or so, and that's why the rest of the world has sold China luxury goods. Europe did, like there's no tomorrow. Highly engineered luxury cars. That's what the Germans were doing. The Germans were exporting enormous amounts of machine tool and other capital equipment. Caterpillar had a dramatic run there for a few years, and it wasn't just the big yellow birds they were selling to China, but to Australia and Brazil and all of the other supply basins. So the entire world boom, and I call it bubble, and it was debt driven, was the epicenter of it was in China. And China has had a economic expansion and debt growth like nothing ever in recorded history. In the last 20 years, their debt has gone from about $500 billion, which was about one time or 100% of their economy. Let's call it a 1x leverage ratio, to more than 30 trillion today.
Oh man!
Which is about 3 times their GDP. Now, these are all big numbers, and I guess your eyes could glaze over a little bit, but here's the way to think about it. If you have an economy that was only a few years before 1990 being run by people who read Mao's Little Red Book and believed that collectivizing the farms and collectivizing the factories and all the rest of it was the path to prosperity, which was a disaster. If you start with that and you have no real settled system of contract law and bankruptcy, you have a central bank, you have a banking system which is not really market-based banking at all. They're just arms of the state charged with distributing credit based on targets and quotas, and I call it cascading that down from the central to the provinces to the counties and localities. But the whole thing I'm saying has no financial discipline, has no competitive markets, has no real established law of contracts like we have here. And in that context, you inflate the whole thing, the debt, by 60 times in less than 2 decades. You are going to get the craziest level of investment and spending and excess, and what we of the Austrian persuasion call malinvestment. In a better term for it is waste. And I go into a lot of that, and let me just give one example of how crazy it is when you go from $500 billion to 30 trillion of debt, and you have money to fund anything that anybody can conceive should be built. In 3 years, from 2011 to 2013, China consumed more cement, or concrete, I should say, than the United States did in the entire 20th century, right?
Wow.
3 years. And to put a kind of metaphor on it, they consumed enough cement to build the equivalent of 9,000 Hoover dams. It's just like a nice metaphor. People have seen the picture of that. That is an enormous undertaking. 9,000 of them, 160 for every state in the Union, including Rhode Island and Delaware. Now, so basically, they've gone mad, as I say, digging and building and constructing and speculating, and this has created a utterly unstable and unsustainable economy. In other words, normally fixed investment should be 20% of a mature economy, maybe 30% for a few years of a economy in the takeoff stage of development, as they call it. Japan was there in the 60s and 70s. But for the last 2 decades, 50% of China's GDP growth has come from fixed investment in public infrastructure, airports everywhere, highways everywhere, bridges everywhere, and private investment both in factories and apartment buildings. I was just in China for about 10 days last spring, and took the fast trains between the major cities from Shanghai to Beijing. And you can go for miles and see high-rise, see-through apartment buildings that are just stacked, one after another, concrete and steel pillars stretching into the sky, that were built because the credit was available, not because of market-based, investment by developers calculating any kind of normal rate of return and assessment of market demand and all the rest of it. They have just gone nuts investing and building. Everything is beyond any kind of sustainable scale. But the problem is, just like when Versailles was finally finished in France, they had a huge depression for several decades because all of the boom time building and supply base was obsolete. The same thing's going to happen in China. And the cement trucks are going to be lined up in their tens of thousands idle, and you can go on from there. Their steel industry, to use another example I have in the book, is now about 1.4 billion tons of capacity compared to 100 million tons at the turn of the century. So, that's a 14-fold gain in something as big and bulky and heavy as the iron and steel industry. But my point that I want to get to here is that they probably have, by my calculations, and it's all laid out in the book, maybe 400 to 500 million tons of sustainable demand for automotive steel, appliance steel, replacement of the steel used in buildings and industry. That leaves potentially 1 billion tons nearly of excess capacity. And that is going to be a disaster for them and, frankly, for the rest of the world. And that's one of the things that Trump has obviously been exploiting. They're going to be dumping product from these massively overbuilt industries, aluminum or steel, eventually automotive, and all the other things they do on the world market, driving down prices, driving down margins. And that has it has a collateral effect. and that is that it stops investment in its track. There's going to be tracks. There's going to be a drought, I think, for a sustained period of time in capex worldwide, especially for mining and heavy industry and transportation, because everything is now so overbuilt due to the China, as I call it, the red Ponzi boom, the one-time boom, that we have more container ships than we're going to need for decades. We have more iron ore vessels than can be used for years and years to come, and same with mines and steel plants and all the rest. So the world now is dramatically overbuilt because the central banks join China in the expansion of credit like never before. And that's why I say fundamentally that we're in a great global deflation of a kind that even makes the 1930s shrink by comparison. And therefore, we're in uncharted waters. But the one thing you know is that when you're in a big deflation, incomes are likely to go down, not up. Profits are likely to shrivel up and disappear, not rebound. And in that environment where incomes are pressured and profits are falling or turning to red ink, the kind of valuations that exist for financial assets today are completely crazy. And that's why we're going to have a very large and sustained correction, I should say, in the years ahead.
And I want to get to Trump, because if they can't service this debt, Trump has talked about basically reorganizing the debt, defaulting on the debt. We're talking about Treasury debt. Could Trump actually default on the debt or reorganize it? And is that a good idea?
Well, I think maybe I would look at what he was saying more as a metaphor. I don't think you can actually default on it. It obviously would cause chaos if we did. But what he was maybe even inadvertently pointing out is that the policy of Washington and the Fed today is effectively to default on the public debt. Because remember now, they have a 2% inflation target. And they say that we're going to print money till the cows come home to get that 2%, because they've created this whole Keynesian scheme that is wrong, but suggests that you get optimum growth in employment and all the rest with 2% inflation and not 1% or 0.5%. Well, I think that's nuts. But my larger point is that if they actually achieve that, and we've had 2% inflation on average for quite a few years now, at the end of 30 years, and we're talking like about a 30-year government bond, it is worth in constant purchasing power only 55 cents. Now, when you pay back someone 55 cents on a dollar's worth of investment today, I would call that defaulting. That's what happens when you have a technical or legal default. And that's the policy of the country, of the central bank today. And, they argue, well, don't worry about that because everybody's income is going to go up in the interim. So everybody's inflating happily together. And the answer is that's utterly wrong, because that's why Flyover America is hurting. Flyover America has to compete with the China price on goods. And a lot of the jobs, like back office in services and call centers and sales operations and so forth, have to compete with the India price. And as a result of that, their wages aren't inflating, even if the Fed is trying to make the CPI go up by 2% a year. And as a result of that, the policy of the Fed is to default on the public debt, as I've described, and to put the wood to fly over America that can't whose wages can't keep up because of the competitive world market with the inflation that the Fed is trying to create. So it's the worst of all worlds. And
is this why? Is this why? I'm sorry to interrupt you. Is this why
Sure.
Jeff Gundlach and Bill Gross and Soros and all these big name people? I mean, it seems like every week they're buying gold. Why?
Yeah.
Why are they buying gold?
Because I think some people are recognizing that this whole central bank driven era of bubble finance and massive money printing is leading to a dead end in some kind of crack up phase in the world monetary system, a breakdown of confidence in the central banks. Now, that doesn't mean that they're going to burn down the Eccles building and put in the criminal docket Janet Yellen and the rest of them, although that might be a good idea. I think what it means is that when the markets lose confidence in the current regime, when they no longer believe the Fed has your back or that there's a put under the market or that they know what they're doing, when that confidence finally evaporates, the monetary system will be in crisis, and gold prices, in my view, will soar because it will be seen as the last refuge, I guess you might say, of monetary assets that are outside, the purview, outside of the control of a failing central bank system. So I don't think we've seen anything yet. It's only a matter of time before the gold price revisits the $1,950 an ounce that was achieved a few years ago, and probably goes well beyond that.
Well, David Stockman, when your book comes out in the next few weeks, when the hard copy comes out, of course, again, this is a advanced copy. This is a you can see it right here, draft copy. It's going to be a whopper, a huge, beautiful book, and you have just given us a preview of it. Here it is. It's called Trumped. And then there's the flyover America. He's talking about a nation on the brink of ruin and how to bring it back. And David Stockman, I gotta tell you, people should go out and buy the book. You've just skimmed the surface. You probably did about, I don't know, a half, all told, about a half a chapter. Nobody can ever say you're lazy. You are, I'll tell you, what a big, huge, beautiful book. David Stockman, thank you for joining us today on USA Watchdog. For you folks on YouTube, I will be linking to David Stockman's Contra Corner, all the information on how to get the book and advanced copies, and also the e-copy on the book will be on their website. David Stockman, thank you so much for joining us today on USAWatchdog.com. I hope you come back soon.
I certainly will. This was a great conversation. Thank you.
Yes, sir. Thank you.
Yeah.